So Gwen, we know that sustainable finance was a key policy outcome of COP26. 450 of the world's largest financial institutions committed to what's described as science-based net zero targets. But what will that mean? Help us in financial professional terms in terms of what that means for organisations seeking to raise investment funding from financial institutions in years to come.
So I'm going to tackle that in two different ways. One is, if you look at where the money is going to be raised from, it's primarily, I'm looking at large institutionals. These are primarily going to be asset managers, pension funds, so like the asset owners. And in the past few years, there's really been an increase in terms of sustainability strategy for most of these asset owners. So they've started off with exclusions, right? You'll have big pension funds out there that are no longer investing in coal, certain oil and gas activities, et cetera. And then on top of that, you had the SFDR regulations that got put in place, at least in Europe. So what that means is institutional investors need to now classify their funds as either light green, so Article 8, or dark green, Article 9. And the trend in the market is that there are more kind of Article 8 products coming up, and the rigor of what makes your product light green or dark green is going to become more important as it goes. So if you're out there raising funds, typically you will get questionnaires from your investors saying, okay, well, what are you doing in terms of greenifying your process itself? And that may impact whether or not they pick you. Or if they're looking at public companies and they're looking at adding that into their portfolio, if you fall within the bottom X percentile, you might get dropped from the fund. And if I take it from the banking angle, some banks, and Matt, you mentioned this earlier in terms of regulatory headwinds, are already starting to look at integrating environmental, social, and governance factors when they look at your cost of capital. So how much is it going to cost you to borrow money? And if you're riskier from an ESG standpoint, then they may not lend you money, A, but B, it's probably going to cost you more to borrow money to begin with. And if you're looking at kind of private funding, kind of the private equity, private debt space, you will have LPs that are going into those private equity, private debt space that are closer in profile as to the institutional investors that I talked about earlier. So they're also obliging the private equity, private debt people to have their ESG stuff in place. So the market's moving, slow, but it's moving.
And to be clear, Gwen, this is not just the sort of usual suspects. I mean, mining, fossil fuels, sort of, yeah, obviously, but this is coming to us all. Is that fair to say?
I would think so. And even as a retail investor, there are regulations now that are in place, similar to how when you would go to your bank and they would ask you what your risk profile is and how much do you know about investing. Now, banks will be required to ask you what your ESG preferences are, and they would have to recommend certain products that would fit your ESG preferences. So even within the retail market, we see this happening.
Okay. Fiona, you have a long relationship with the Ellen MacArthur Foundation, I know, and together with our friends at PA Consulting, you recently developed a circular business model design guide. It's a brilliant piece of work, I have to say. I'm always hesitant to recommend other consulting companies, but it is very, very good. To what extent would you like to see financial institutions coming forward and or more organisations seeking finance more proactively to make more use of this sort of tool? I mean, clearly you believe strongly in it, but is it something you're seeing widespread utilisation of, or are you in truth a bit frustrated by the pickup?
So, I mean, in the area of circular economy particularly, we are seeing that it's being driven a lot by those smaller businesses and startups who obviously are more dependent on that external financing system. And, you know, it's a key part of their success that we've seen. And so we are seeing more private equity firms focusing on ESG funds, for example, and even specializing in circular economy. So we work with a company, Circularity Capital, who are particularly looking for smaller businesses to fund that are demonstrating alternative business models like remanufacturing or product from waste or extended product life cycles, for example. However, I worry that there's a risk with ESG funds in particular that they are used just to attract more organisations, and because it's a term of the moment or it's a buzzword, rather than trying to embed sustainability truly within organisations and using those funds to really support businesses to change and to make it part of their core business. So I think there's a lot of work to do with those with those funds and fund managers to really understand the credibility of them and what they're doing in addition to the usual support to make sure that sustainability is truly embedded. But I mean, I think from a finance perspective more widely, we're seeing that there is definitely a move towards sustainability, towards circular economy, the area that I work in. So, for example, last year, the UK government invested £30 million to fund the National Interdisciplinary Circular Economy Research Programme, which I'm part of. So that funds 5 research centres of excellence, focusing on particular resource flows, and then an integrating hub. And as part of that funding, Innovate UK are putting £2.5 million towards CR&D funding to support those SMEs that have new solutions for how to move towards a circular economy. So I think, as you said, Gwen, things are moving, but we need to accelerate that and we need to scale that up.
Do you see financial institutions coming to you in academia to understand it better? I remember Gwen taking studies on sustainability a few years ago, and various numbers of her colleagues did the same, took it pretty seriously to really learn it. Do you see enough of that from the financial services world?
I think we have seen an increase. So just referring to the circular economy masterclass that we run, we have seen an increase in finance-based institutions that are coming on that and sending colleagues on that, although I wouldn't say that it's kind of a core sector yet. I think we're seeing an increase, but not quick enough.
Work to do. Can I ask you both about the kind of certifications that organisations take to prove their credentials in this area? We as a consulting company, I think probably everybody watching this knows we bang on about being a B Corp certified organisation a lot. It was nothing like as easy as I thought it was going to be, which actually turned out to be, a bit of a relief, frankly. But does that hold credence with either of you? Are there others that you think are, more substantive and that organisations should take seriously? I mean, it feels like every week yields another certification that people should be getting. So it feels like a bit of an arms race at the moment. Gwen, what's your view on certification?
I go back and forth, because from a certification standpoint, it would make it easier to validate which ones, which companies are doing better. Or if I take kind of the voluntary carbon markets, for example, it's verified by the Verras, gold standards of the world, then I have, it lends more credibility, therefore it lends more potential to scale. But as you mentioned, there's a gajillion of them coming up all the time. So then how do you benchmark one versus the other when they're also new? So there's not really historic data behind it. And on top of it, if I take something like B Corp that you just mentioned, it's actually very hard for large, diverse organizations to become a B Corp. So typically they will only do one of their subsidiaries or one of their branches because it's much easier that way, and it's not made for big conglomerates or big holding companies. And lastly, for the big organizations, what they tend to do is they tend to make these, newspaper splash commitments, which you saw at COP, which you mentioned with the whole like net zero commitment and whatnot. But the more important thing is, how are they actually getting there in terms of target setting that's rooted in science, that they are showing accountability in the reporting that they do online, either in the sustainability reports or in their audited reports, that they're meeting these targets through ABC actions, whatever they are. So I think that's probably the more credible route. And one last thing on certification is that for smaller organizations or 1 or 2 person organizations, it's actually really hard to fill in a lot of those paperwork in order to be certified. So that's a huge barrier to entry for SMEs that may need this funding and that may actually be more green than the other companies that are getting it.